Hello traders, so I'm Orlando for Snipe the Trade, and today we are going to talk about what just happened with the US non-farm payrolls. Now let's go to the economic calendar for a minute and let's see what happened. Okay, so the non-farm payrolls came out better than expected. Actually, was a huge beat on the previous May numbers, which were very disappointing. And of course, it was a huge beat on the forecast too, with 265,000 jobs added in June. And as you can see on the chart, uh, we not only we beat the previous numbers or the May numbers, we actually beat the previous numbers up until uh, January 2016. So very strong numbers from the US, which means that we are going to get a lot of bulls coming out and buying dollars when the announcement was made. But there's something going on with the dollar right now. Let me just show you the 50-minute chart on the dollar index. Now this gap is where the non-farm payrolls were announced, and as you can see, buyers came into the market from this level around 96.100 or 96.10, and then went all the way up to the 96.69 or 96.70 level for a 60 pip a 60 pip move to the upside. Then we had a huge move to the downside. Sellers came in and pushed price down, and we had this very big absorption candle breaking with the previous lows and the previous structure that price was trading in on this instrument, which is the US dollar index. So we broke with this previous base that price broke to the upside and tested once, twice, three, four, five, six times, and we absorbed all those buy orders with this candle. Okay, now if you look at the euro US dollar 50-minute chart, you can see that the euro did the same, of course, with buying pressure on the dollar. The euro US dollar went down, but it only went down for about 80 pips from the high to the low of the move, and then we had some buyers coming in. Okay, buyers on the euro US dollars, of course, sellers on the dollar, pushing price up, and now we have broken with this structure that the euro US dollar was trading in. Right, this is the 50-minute chart, and you can see that we were trading inside of what seems to be a triangle. Of course, we broke it to the downside on the actual non-farm payrolls announcement, and then buyers came in, and or sellers or dollar sellers came in and started to push price up. So basically, this is why non-farm payrolls can be a very difficult time to trade the currency markets. One, because you have to be very careful when you enter and exit the market, because had you entered at the break of this low at the non-farm payrolls announcement, you should have taken profit around these levels, not because those levels are where the price or where price ended its move, but because we are talking about the previous lows. Okay, and of course right here, if you didn't if you were in a short trade and you didn't take out your profits while you could, then what happened is that all those wins were erased by this huge move to the upside. Okay, so right now I'm going to show you where we are in the E-mini S&P 500. We actually found a much technical entry on the E-mini S&P 500, and the reason we don't trade the euro US dollar or the currency markets during this high impact announcement is because it's going to be very difficult for you to get the trade signal in time. So we do not send out signals during this high volatility momentum. All right, but we did encounter a very nice breakout on the E-mini S&P 500. So if we look closely right here, the E-mini S&P 500 was trading inside of a range. Okay, well, not trading inside of a range. If we go to the well, this is the hourly chart. Not inside of a range. We are actually in a very strong up move. Okay, from the lows of the Brexit, we have erased almost all of the losses from the Brexit, and now we're starting to move up again. Okay, we traded this very nice move to the upside, and we were actually waiting for a continuation to the upside. So what we did here is we waited for the non-farm payrolls announcement, and what we did here is we saw this break to the upside. So after a break to the upside, price is most likely to retest the breakout level on a technical basis, of course. So what we did here is we put a buy stop, a buy limit right here, and we are where our stops are below the previous low. I know some of you will think that this stop loss is a lot wider than you can handle, but remember that the stop loss is not dictated by you or how much money you want to risk, but it's dictated by price action and the market and key points in your charts. So what you need to do is just calculate your position size accordingly. Okay, so we are risking around a little less than 1% on this trade, and we are aiming at this zone. Now let me show you first of all what happened here. This was a zone that was tested before as resistance. We moved down, then was tested again, and then we moved down, and then we broke with it, all right, during non-farm payrolls. So what we did here is we are trading the retest of the zone. We are not trading non-farm payrolls. We are trading the retest of the zone. Okay, so we are going to zoom in, and I'm going to show you the first area that is going to be a problem for a long trade. Not a problem, but the area that we might find some sellers at. This is the zone where we are going to probably find some sellers. Okay, I know our targets are all the way up here, but this is because we calculated our targets according to our Fibonacci rules. But I mean, we are going to take a closer look at what happened or what's going to happen here, and of course we are going to manage our trade accordingly. So if we see some bearish pressure here or some sellers jumping in, we are going to start to, or we are going to try to maybe move our stops to break even, or maybe start to close our trade. But in the meantime, we remain long. As you can see, we are actually making higher highs, higher lows, and we have broken with the previous high, and this is the 4-hour structure. If we go to the 1-hour chart, you can see that we have also broken with the 1-hour structure, which is this one. We have made a high here, a higher low, and we have broken with the previous high, which means that we are going to make a higher high. Now the US market, or the US session, the New York stock exchange has not opened yet, so we are going to wait and see how many buyers that opening bell brings, and we are going to keep you posted. But if we go to the daily chart, our targets are all the way up here, where we are definitely going to start to get some sellers. Now if you want to get notified when we go live for the end of day market commentary, or when we upload new videos, just subscribe to the channel. And of course you can go to snipethetrade.com and subscribe to our signal services and or our market analysis and live trade room services.